Hello, 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 everyone. Happy Tie-Dye Tuesday. How is everyone doing today? Quiet day, quiet overnight session. Very low news day. Doesn't it seem like we haven't had a quiet day in a long time? Hello, Patrick. Good morning. Good morning, Martinez. Good morning, Jacob. Anissa, good morning. Hello, Charles. Good morning, Andrea. Thank you, everyone, for joining us and all the people behind the scenes that don't comment. Thank you for being here. So, very little. We had balanced a trade out this morning. We had Redbook come out, which is a minor. In case anybody doesn't know what this is, it's same store sales by dollar value, so it's not inflation adjusted. But you see coming in at 5.7, so same store sales not adjusted. Prior was 10.4, and you see that's even lower than any point in November. Coming in December, it's going to get interesting for holiday sales. Gonna get interesting, but that is very minor number. Just wanted to point that out. Stock market map, very, very mixed this morning. Some mega caps slightly up to mixed. Oil and energy still down. Oil and gas exploration is definitely down. Oil and gas integrated is mixed to down. Again, groups, energy is down. Basic materials is up. That's the two big ones. Fed watch hasn't budged a penny. I might have budged a penny, but roughly 80% for that 50 basis point. I'm actually surprised it's not climbing at this point. But we do have the PPI and CPI technically out before the announcement. Still in greed mode. In terms of gamma, we are back pretty decent, not super negative gamma, but decently negative gamma, so we can amplify the rallies. Now remember, rallies tip back to neutral gamma above around 40.50. So you can get a snap rally back to 40.50, but then it shifts to negative gamma. I mean positive gamma. Any decline keeps taking it into bigger negative gamma. And remember, there is this very huge call and put gamma wall at 4K. AutoZone was a beat this morning. So that was very interesting. I want to see where that opens. And other than that, nothing going on. After the close, I always look at Dave and Buster's. It's interesting to see sort of disposable, frivolous income for people, especially going into these times. Other than that, yeah, you got housing with Toll Brothers, but nothing much. Nothing major. Really nothing major. So just a quiet day. It's the quiet period with the Fed. Oh, it's so nice because remember, we always used to be able, it always used to be okay, quiet news day, but then you'd get Fed speak. So it wasn't quiet. So far, let me just zoom in here, then I'll jump back and see who else has joined. You see, very quiet day. We're holding yesterday's lows so far in the S&P. So, Sterling, thank you for being here. Good morning, Dave. Hey, George. Financial YouTubers have gone from yay, Fed pivot to flames and hands on their faces. What does flames and hands on their faces? What? I don't follow other YouTubers really for at least the financial stuff. So you'll have to let me know. I try to keep my stuff based on my own analysis. Don't want anything really to interfere with that. I'm just curious. I mean, everybody can do their own thing with their analysis. That's what makes YouTube and the financial markets wonderful. This line I just drew is roughly, it's below the midpoint, but it's a key area I'm watching. Why? It's a little below the halfway of this channel, but it also comes nicely in line with the 20. So that's just something I'm keeping an eye on. If we break yesterday's lows, which is also the 62.5, 39.8650, you know where I'll be watching on a closing basis. But if we do break below that, the next key support is about 39.72, and then the major level has not changed, 39.54. Now we get a close below that 62.5, then I will start targeting that 50 exponential area and the major support zone. The major support zone. So that's where we sit. Daily cycles heading back to the bottom. Weekly, we're starting really to get that more substantial rollover. So it's going to get interesting if we really break some key levels of support. Consumers are spending down their excess savings from pandemic stimulus programs. That will run out in 20. I think they've already spent more than people think. It will get super interesting. I also, I think this is the last sort of hurrah period between the summer and then now the holidays, and there's no lockdowns. You don't have to wear a mask everywhere. It's sort of like, let's just enjoy this stuff and we'll deal with the consequences later. So this will get interesting. Next year is going to be a doozy. Hope everyone continues to tune into the channel next year because it's going to be a doozy of a year. Maybe we finally get a flush out move. And then we can position ourselves for a little more longer term strategies. So yeah, I think I'll give the U.S. Open a miss today. Took a short on crude and I'm done. Well, there you go, Charles. Fed pivot. They're not pivoting. I'm so tired of hearing everything is. People just like to use words they don't understand. Financial YouTubers put a hand over mouth and open eyes like they're watching a murder in progress. Based off of what? Am I missing something? Because we've had a slight pullback. And longer term I'm bearish, but I'm not seeing what's going on. Now we break, we start breaking this 3911, 3900 level. Maybe I'll put out a video like, that won't happen. But you'll see a interesting headline. Fed pivot capitulation in the start of the bull market. Oh, there we go, Coco. Thank you for bringing it full circle. Now they need rhetoric to match the cooked books. Who's cooking the books? What books are cooked? Specifically. Dream on with a Fed pivot. Is that how is that the song we should use? Aerosmith, Dream On, for the Fed pivot? Should that be the Fed pivot theme song for everybody wanting that pivot? Pivot won't happen before pause. Yes, it will pause. That is correct. And slowing the pace. Wells Fargo CEO says consumers' account balances and spending levels are coming down. Some of this is stating the obvious. I'm actually going to bump this level up just a little. That is actually a better fit line. So we're sitting right at it, and then you got the 20. NASDAQ, again, very quiet. NASDAQ, the double still in place. The NASDAQ, 11,720 is what I'm keying off of on a closing basis, and just below that is the 20. So that's my support zone, 11,700 to 11,720, 11,720 on the closing basis. We start getting below that, then it gets very interesting, because we can easily test these lows probability-wise. You break those, then it gets interesting. Cycles still have more to roll over in the NASDAQ on the daily, and the weekly finally starting to roll. Also, look where that 200 week is, right at that trigger point for the potential double. Yeah, so that's going to be a super key area. Oh, I didn't go over my bullish case. Bullish case, it's pretty much breaking overnight highs at this point, 40.14, and then above overnight highs, I'm using 40.32, then about 40.45 to 40.50. Though that's it for the NASDAQ, or for the S&P. For NASDAQ, same thing. Overnight highs, Then I'm using the harmonics, 11,884 to 11,9, and then 11,975. You can try to fine tune that with shorter levels. I really don't need to do that because I'm sort of waiting for the bigger picture stuff right now. Dow, it's trading just above key support 33,850. We break below there. I'm watching the low from JPOW Wednesday, and the on a closing basis just above that we have the 21 EMA about 33,650. So that's that key level. On a rally, I just utilize personally. Besides looking at shorter term price action, I'd really be gauging overnight high about 34,192 to 34,200, 34,295. Russell, yesterday's lows are going to be key, and then I'd key off the 50 exponential about 1826, and 1823 to 1820 is major support. Again, overnight highs. Then I'm watching back to the 200, 1861. The DAX, this is turning more into a horizontal channel, but I'm still watching for that breakdown, 14,337. If we get another rotation up, it's definitely in the horizontal channel and the rotation zone with the bottom seeing. We going to watch this with a closing basis to see where that fills. Let me get the spiders and the Qs. The spiders, yesterday's closed 399.59, 399.94. So any weakness, I'm watching for that pullback to 399.59. And then it would be yesterday's lows, 398.17. And then it would be 395.75 area. On a closing basis, it's 397.59. That's your key area you're watching for the close. Why? Because you get the close below there. We could target the area around the lows from the 21st of November and the open from the 17th of November. To the upside, this is where I will just glance down. See, you have a clear path move up here on the 1 hour. So I'm going to be focused on on the spiders on the 1 hour, about 401 and then 402.40 are my levels on a rally. 402.40 is a breakdown area. 401 is the hooking 50 and the declining 8. And if we look here, you can see if you really need to fine-tune stuff, right around 401, you have this little hitch in the market. You have a little overhead resistance there. But you still have a pretty decent clear path on the 1 hour to trade back into. So that's the bull case there. Qs. 288.15 pre-market. Yesterday's close 287.64. So any weakness is 287.64 is my first level. Then I will utilize yesterday's lows 286.15. On a closing basis, it's 285.39. So that's on the closing basis. And your support below that is 284.43. To the upside, also with the Qs, we have a little clear path move, but the stopping point, do not ignore. We have this gap down area and the lows from Friday coming in line with the 1 hour rotation zone. You see this little window. It's a little window with the 1 hour rotation zone. So that's the key support on any, or key resistance, 288.36 to 288.97. And then above there, it's a pretty quick magnet to this gap open, 290.35. And then you still have a gap fill left behind is the more longer term bullish case I'm not focused on today with. Notes. The notes holding, you see the key support line. We've had a 113.24, 24.5 with the rising rotation zone. So we break below there. I'm watching for the gap fill to the close. Other than that, cycles turning over with so far a wide range, we'll call it a wide range sideways correction. Dollar index, and dollar is critical. Little pausing bar against the rotation zone. So it breaks above about 105.10. My key level is 105.62. And then about 106.20. We break below overnight lows. I'm still using 104.30. quiet, but cycles are now starting to turn up. They're at the lows on the weekly. So I am prepared for a possible more dollar strength. We just don't have a strong bottoming pattern. Now we're against key resistance. So if it starts getting some momentum above this level, we could see a quick run to the other side of the rotation zone. And that could, from a technical standpoint, do some damage to the market. VIX holding against the rotation zone. We start moving up. I'm focused on yesterday's high, and then yesterday's high coming in at 21.29, and then my next level is 21.82. So that would tip me into choppy bearish mode. We break down below 20.35. I'm focused on yesterday's low, 1978. Wonder what a hit song from 1978 was. So, and then we got 2032 below that. Crude, we finished the double pattern. That's done. Settlement actually triggered below the 62.5 yesterday, so we could easily see some more weakness. But yes, this can be another little potential double. We'll keep an eye on that. But other than that, I'm sort of steering clear of crude until we get some more clarity. I'm steering clear from the short term. What else? Keep an eye on the dollar, especially with gold. Gold, we're getting a bounce off the rotation zone, but you break down below this now 1778 level. It's the gap fill play. Other than that, I'm watching for a more substantial top to be put in the short term. So we're getting our first reaction at the rotation zone, but you start breaking down from here. Quick trip to the bottom of the rotation zone, and that's also going to be dependent on the dollar. Let's see. Let's see where we sit. Good morning. Good morning, Gary. The seasonally adjusted numbers, I hope, aren't out of sync, like mentioned in the technically speaking, for the retail and non-farm payrolls. Oh, you're going to see some massive adjustments in January. You watch. January numbers are going to be interesting. Wow, did not know that. VW brand chief paying up to 800% of original price for chips from online. Wow. Interesting. Boomer music from Gary. We have lots of testing days before CPI and FOMC. Yes, we do. And we have PPI on Friday. Hey, Chris. We just announced from Newsom, first price gap independently up. Oh, jeez. Please. Oh, what time? You know what? We literally have morons. Morons. How do morons get so widely elected? How? Here's your tie-in. You might as well buy those EVs like Tesla. Tesla gapping down, so it's going to be that gap fill. The key level on a closing basis is 178.46. 178.46, close below there. Target the lows from November. Other than that, still hit that first target on the week. Head and shoulders because of that horribly messed up shoulder. We're just using the targets on there for any rallies. So it's the gap fill. And then your next level, I'd use intraday 186.65. If you break below 178.46, 174.37. I'm waiting for the gap close, but that's the dollar's taking its time. Yep. God help Californians, but you get the government you deserve. You know what's so interesting? Because, and this is, I talked to a lot of people. We have like family out in Arizona too, and they're like, all the Californians are moving to Arizona, complaining about how bad California's got, and then they're trying to vote for the same thing in Arizona. They don't realize that They voted for what they got in California, then they left because they didn't like it, but now they're voting for the same crap that they left. People just don't learn. Gavin Newsom is a villain from Atlas Shrugged. Dream come true. Thank you for being here. GTLB. GTLB. I mean, you have your GitLab gap up after earnings. But overall, if you're trying to play for a short-term rally, I'd be watching this 45 level. You still have the where is it opening? 43.78. The closed gap, the prior gap fills 43.79, so that's going to be technically filled on the open. So, and then you just don't have much. I mean, your next, if it makes a bullish run, I'd be using the 200 again as the 200 area, about just under 50 as the major target. If you're trying to intraday trade it, look at the 62.5, 44.65. You get a close above that with the 50. Then I'd be using this target area with the highs from November and the 200 as a target for a short-term swing. Other than that, the only negative is you now have a pretty decent gap fill, but a break below wouldn't start really playing that until below 42.96. And then I wouldn't target the full gap fill yet. I'd target 41.27. You got a harmonic coming in with the open, and then I'd look for the full gap fill. Right now, the only concern for the bullish case, which is why I need it to really close above that 62.5, is you have, even with this gap daily rolling over and weekly against the weekly rotation zone. So I'd be cautious until it gets that close above the key area from the bull case. We're a trendy state. Which state? Hey, Newsom just gave the middle class tax raise $250. Everything is fine. Everything is fine. Trigger double bottom on daily in EXPR. Oh, we have to look at the weekly. The daily's weak. And this is one of those lower probability weekly setups because of this. See, I'd steer clear of it. There's too many things wrong with it. And this especially, hey, look at that with the harmonics. No, steer clear of it. There's too many things. This would be a very forced trade. When you get the single candle being the base and this on a weekly and the daily is multiple bottoms. This was more of the breakout trade from this level. I wouldn't touch this thing. When you'd have to be forcing something to get this trade. This would be on the low end of the radar screen. Yeah, it is very, very sloppy. And when you see that, now if this was well formed on the daily and you have a single candle like this on the weekly that's still high and low, okay. But when you have this on the daily, this doesn't matter. I'm not just talking about Express. I'm talking when you see this kind of pattern, this is not a well-formed double, and you'd be forcing it, especially that the high and low are the same point on the weekly. It would have just been a little breakout. What's going to be key on this is a breakdown play below 121 again. It'll pretty much trap everyone going into earnings it could trap everybody who played this breakout. Dave's flat. All year, Dave's flat. He's waiting for the long-term entries. Dave is waiting for the long-term entries. Hey, if you're a long-term trader, that's a smart thing to do. That is a smart thing to do. All right. With that, we got 1 minute to the open. Let me just peek at the S&P. Again, it's dead. It's gone to sleep, which is it's actually sort of nice. We could be in for a substantially choppier day. So unless I see very decent momentum, or I have like either very strong positive tick consistently with momentum or very strong negative tick consistently with momentum, I would advise to not get chopped up. You are also in a very key support zone right here on the higher time frames. So if you don't have anything, unless you're really good at playing chop, you know, if you're really good at playing chop, this could be a banner day for you. Other than that, nope. Let's just see where the tick opens. Then I have to jump. I mean, look. Can you get any more neutral tick opening? Look at this. Look at this. It pretty much opened. The tick opened 17. The tick opened flat. Do not force. Do not force until you see a market shift. You got key support 39.96 area, key resistance 40.13. Don't get chopped up. If you do break down below 39.96, you have a lot of buying pressure from yesterday. Yesterday in that area, 39.87 to 39.92. So that's key support. There might be some breakdown plays, but don't get sucked in unless something really changes in the macro, because it could just be some little, hey, we're trying to get some volatility in here for some short-term stop hunting to fake people out, to get some movement. The real play is if you get starting to break above 40.13, and then we go to that 1 hour rotation, because you got the clear path up here. But do not ignore 40.25. So it's going to be one of those, unless you're really good at micro trading, one of those more challenging days unless something shifts. My advice, don't get chopped. Yes, good trading, everyone. Thank you, Dave. Yep, there you go. All right, by the way, this is way too sloppy for a double, even if it pushes down. Do not force anything today. That's the lesson. If you can't find a good setup, sit on your hands, do some market research, practice some things, but don't force. I'm just peeking at crude real quick. Little revert. That's a pretty strong bounce on crude. But yeah, nothing. Nah. I'm gonna focus on some things, adjust some things, and then see what's going on. I will talk to everyone later. Have a fantastic trading day.